Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 16th of July, 2019. We're going to talk a few stocks in focus that have earnings on Wednesday, the 17th. Today, we had some financial companies, and those included JP Morgan, Goldman Sachs, Wells Fargo, Charles Schwab, and a few others. Others would have included Johnson & Johnson and United Airlines with the good old Domino's Pizza. But that's behind us. Let's talk in tonight's video about key names for Wednesday. And just before we do that, we'll take a look at the S&P 500, which closed the session just above 3,000. It's still overbought, overextended, at the upper end of its range. This is a new all-time high. I guess that was yesterday. And today was a pullback or retracement from that high. So stocks are at risk of a deeper pullback. We are on guard for that, ready for it, positioned and prepared. But if the market holds above 3,000, and if these earnings reports are good, or better than expected, you may see this market go even higher. But until then, we'll just focus for tonight's video on a few key names that are releasing earnings either before the market opens tomorrow or after the close. For earnings plays, we just referenced Don's strategy of looking at our expected move or the implied volatility movement. We can look at that, or at least visualize that, through our probability of expiration cone. Also the ADX, which is an average directional index, ATR, average true range, that helps us as swing traders or day traders about how to expect or how far to expect an intraday move to go, or maybe even stops or targets for swing trades, and our good friend, implied volatility. Let's kick it off with Netflix. Netflix will be reporting after the market close tomorrow. Let me go ahead and update our daily chart, and just by extending our trend lines. So Netflix has a 380 per share pivot, 360 per share pivot, and 340, which is our lower trend lines. We would consider that a support level, resistance level, and midpoint. I would love to tell you that we knew what's going to happen in Netflix, but any stock in the middle of a rectangle or a middle of a compression pattern has equal chance of going up 20 points or down 20 points, which is what the option statistics, implied volatility, which has been creeping up before this, and of course, the probability of expiring cone. We can combine the two by taking a look at our trade grid. Just want to focus on one statistic. So our near-term options that expire this Friday have been goosed with implied volatility of 92%. For us, that means a $27 up or down move. So what does that take us? Just beyond 380 or just beneath 340. So the process for there, if you do not want to trade an option before, but you want to trade the outcome, this is again going to happen after market hours, we can play any type of position from that spot. So mainly looking for Thursday or Wednesday night, Thursday morning, or Thursday's trading session. If you see Netflix up toward 390, that could be an intraday fade opportunity to purchase puts into a departure from an expected move target via earnings being achieved. The same will be true, especially if we're under 340, 336, 335. That takes us to a key support level with calls or long positions to bounce us right back to 620. So I don't really want to play the pre-earnings move, but maybe I'll play or look to be interested in, of course, depending on what happens in real time, the departure from the expected movement. We'll get a precise count on that at tomorrow's close, but at the moment, just reference one more time, Netflix has a roughly 27 up or down move. We can also see it here in terms of the expected move or the implied volatility in our probability of expiring cone. Next up, after Netflix, is IBM. We'll take a look first at the chart, then the option statistics. From the chart perspective, IBM is 145 per share. That is a key resistance target. That's a key spot we'll be looking at closely really about 133 is our lower support, and a trap, or bear trap in this case, V-spike reversal, came up against 125. So your key levels would include, just for reference, 145. If I looked at this in complete and total isolation, I'd probably be short or bearish into 145. But we do have earnings. We have implied volatility creeping up well before this earnings event, really from June into July. That is your implied volatility grid, peaking and just coming strangely a little bit lower. That's in part because the last 4 sessions have been straight up. So we're looking for that expansion play. Now, let's talk our option statistics. On IBM, note that 145 is our key level. It has a 52% implied volatility, which means about $6. That's up or down. IBM also will report after the market closes. So you'll have a better perspective on this after tonight's video, through Wednesday's trading session, and finally into the close. Your pivot or position spot should be 145. Could see it up to 151 or down to about 138 or 139. Either way, play that movement from that spot in the next session, Thursday or beyond. Bank of America will be next. That was one little financial stock that couldn't quite play with the big traders on today's session, but nonetheless has achieved our upside target. We've discussed Bank of America before as a long against support at 28, target up to 30, and that has, to that arrow, that has been achieved. So now Bank of America, just like the broader indexes or some of the other stocks, is at the midpoint. I guess sort of like Netflix, really, given that the resistance is 30 per share, support is just beneath 28 per share, and that midpoint, 28.75. We'll focus mainly on implied volatility. We'll actually take the ADX off the chart just to clarify what our implied volatility is and the cone of expiration. Not seeing a whole lot. So Bank of America remains compressed. What do the statistics say? 35% implied volatility on the near-term option, which is about less than $1. Lackluster. I'd probably look elsewhere to trade some other stock that's moving, unless you trade large size intraday. Bank of America, is interesting as it is range bound with an expected option expiration or earnings move of less than $1. Couple more. Let's look at eBay together. So eBay is going to report earnings after market close. It is one that has appeared on our 52-week new high scan. So implied volatility has crept to the upside, but as implied volatility, or average true range actually, the daily range, is at session lows or annual lows. So what is the key spot for eBay? Just shy of 41 per share. That is essentially a new swing high or 52-week high. Let's go back a little bit further and see if that's a major level. Not quite. Not an all-time high, but a key pivot upwards of 44, 45, or even 46. Just cross-checking the weekly chart there. What about the options? As implied volatility has increased, we are seeing a 66% implied volatility reading, which is going to translate to about $2.12. So if this closes tomorrow at about 40 per share, you could see it up to 42 or down to 38. That's going to be the play for eBay. Of course, watch that 20-day exponential moving average and the upper resistance just shy of $40.50. Let's look one last one, which is Kinder Morgan. That came up in some trend stock scanning in today's session because it had a downtrend. Now this is going to be interesting because it is coming off of $21.50 per share. That's the prior high, still uptrending, but that's forming a little bit of a resistance pattern. That's into $21.50 with volume divergences and the like. Keep a close watch on this one because it is forming rising trend line patterns, and that's really a rising parallel trend line channel. Still uptrending, but is at the lower bound. So in a normal environment for KMI, I'd probably go long up against this, knowing that our divergences And any other kind of play or break under $20.80, $20.90 could set up a push all the way back to 1950. This is probably going to be one of those concepts like Bank of America where the share price is just not worth it, or the juice of the profit is maybe not worth the squeeze of the time, putting in the levels, in the spots, in the option positions or the trades. Nevertheless, 35% implied volatility, 60 cents. There are certainly other opportunities out there, which takes us right back to our good friend Netflix, which has a 20 point, only 27 at the moment. That'll change tomorrow. Up or down move as we go into its earnings on Wednesday. As always, be safe and careful. This is Corey Rosenblum with your Theo Nightly video for July 16th, 2019.